We're all in a state of confusion over Brexit. Where's it go? What's it mean? Are we going to get an extension? And of course, the big question is how can you protect yourself against what's going on? Is gold the answer? Simon Popple joins us now from Brookfield Capital.
Hello.
We talked to you a lot about gold and its importance in an investment portfolio. We thought we'd chat to you today around Brexit and just talk a little bit more about how you see gold as a gold bug in this political confusion at the moment that we're going through here in the UK.
Yeah, absolutely. I mean, I think Brexit has caused a lot of confusion and uncertainty, and markets don't like confusion and uncertainty. And whether you're a leaver or a remainer, we've still got uncertainty. And I think that gold has got a role to play in that market because, I mean, the pound has already suffered significantly. And I think that people should consider having an allocation to gold.
Okay, well, let's take that apart and talk a little bit first of all about gold in the context of Brexit, because I think Brexit globally is seen like a local issue, but gold is obviously a global or more globally facing solution for some people at least. But you just entered into the discussion about foreign currency. Now, in foreign currency, I think in sterling terms, gold has recently been at record highs, hasn't it?
Yeah, I mean, gold has done well in pretty much every currency. In dollar terms, it's sort of hovering around the sort of $1,500 per ounce. And, gold, it's a tangible, physical thing. You can't print gold. And I think that with everything happening in the world, as you rightly say, it's a global asset. It's not a local asset, so to speak. I think that people should consider it.
Well, let's take a look. You brought along a chart which I found interesting because there's different ways to read this. If we can bring this chart up, we can have a look at how we work our way through this. Let's explain what's going on.
Well, the way you can look at this graph, I mean, I've split it into 4 quadrants really: gold price going up, gold price going down, pound up or pound down. Now, I think what I could argue is if the pound goes up, people, their house is in pounds, they get paid in pounds, their pension is probably in pounds. So if the pound goes up, you're pretty happy. So what I would argue is that there's a reasonable chance that the gold price could improve even from these levels. And so if the gold price improves and the pound continues to fall, then you're not only profiting from the gold price going up, but you're also profiting from the fact, the dollar, which is, the gold is priced in dollars, is going up against the pound.
Okay, so let's take the other side of that and talk about the effects of a drop in the price of gold. Yeah,
obviously, if the price of gold goes down, then people really are then left looking at the difference between the movement in gold and dollars and sterling, and that's a bit of a sort of a hodgepodge because it really depends on the relative movement between everything. But personally, I think that gold has got, the best days of gold are ahead of it rather than behind it, so I think that is probably less of a concern.
Let's set up the situation, then we get a very pleasing outcome to Brexit. Sterling rises and gold rises by a lesser amount. Does the argument then not tend to lend itself to the idea that you shouldn't be owning gold if you're a sterling trader?
Well, in a way, yes. But I mean, I think what I would say is, given that your house, your pension and your earnings are all in pounds, if we get that and the pound rises, fantastic. I'm only talking about putting a small allocation in gold. And I think I'd also add to that most people, if they've got investments, those investments will have exposure to the pound, the euro, the US dollar. So what I'm really saying here is you should also perhaps diversify those a little bit by having a small allocation to gold.
Yeah. Okay, all right. Well, look, it's a pleasure having you back in the studio. Simon, thanks indeed for joining us. Simon Popple is from Brookfield Capital, and you can catch up with Simon on his website and read his newsletters.